Hey, welcome to today's lesson day. We're going to talk today about how do I use candlesticks and specifically the bullish engulfing candlestick pattern. Now, whether you're a stock trader, futures trader, crypto trader, forex trader, this is a really useful lesson to learn because it's really asset class agnostic. It doesn't matter what asset class that you're trading with when we look at these candlestick reversal patterns. So what we're going to do is do a real quick lesson today on reading charts and how to use candlestick reversals. But then, more importantly, we're going to actually go into the markets and look at something that happened very recently and see how can that tell me a little bit as to what may happen when it comes to price movement. Okay? So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, leave a like and a thumbs up. That means a lot. The content hopefully will speak for itself. And then leave a comment down below. What do you use for your candlestick reversal patterns? Do you use candlesticks in your trading? And if so, what's your favorite reversal pattern? So when we look at candlesticks, we're essentially learning how to read charts, right? That's what we're doing. We're reading charts. And a candlestick chart shows me the change in price over a given period of time. Whether it's a one-day candlestick or a 5-minute candlestick, it's going to show me how did price change during that given period of time. And so when I'm looking at a candlestick, what I'm really looking at is the relationship of how they feed into one another. And in candlestick charting, there's essentially two parts to that candlestick. There's the body, which is the red or the green, and then there are the wicks or the tails, sometimes called the shadows. And those are going to be above and below the body. Now, a candlestick shows me 4 pieces of data. It's going to show me the opening price in a given period of time, the closing price during that given period of time, the high and the low. And so when I can see the open, the close, the high, and the low, in those 4 things, I can see a little history of price movement. For example, if I have a long lower wick, but a very small body, well, that means that price opened and then dropped, and then something during the day caused price to rally back up, and it closed near the high. So even if that candlestick is red, it still might be a bullish candlestick overall because of that long lower wick. Now, what if I just have a body because we opened at the low and closed at the high? Well, that would just be a big green body, right? And so when I'm looking at candlesticks, while it's good to look at just one candlestick to tell me what happened during that period of time, when I'm looking at these candlesticks, I might want to identify, based on the wicks and the tails and the real body, how do they relate together, right? What does one candlestick feeding into the next candlestick look like to give me the better picture of price movement? Because if I have a candlestick that is a fully red body completely covered by a fully green body, well, then that's going to be a very powerful picture indeed. And that's what's called the bullish engulfing candlestick. And the bullish engulfing candlestick, if you take a look at this picture, shows that our green candle completely engulfs the prior red candle. So what does this mean? Well, if you think about it, what this means is that our red candle opened at a high and closed at a low. And then the very next day, our green candle opened lower than it closed the prior day, which means there was some sort of post-market trading that caused that to happen. And this is very, very important to see. And so this typically shows up on daily time periods where we have some sort of a gap that's available in price. So when I look at a bullish engulfing candle, it means that we had to have traded down in the overnight hours, and then we traded up throughout the entire next trading session. This, in my mind, is the single most powerful reversal candlestick pattern that you're going to find. So an example of this pattern can be found in the NASDAQ, which occurred on October the 13th. So looking at this chart of the NASDAQ on October the 13th, we can see that we had a price of this red candle where we closed very near the low on October the 12th. The very next day, on October the 13th, we started the day opening down here. Now, this is a daily chart, and we can tell that by the D that's up here. And when I switch this from the daily chart to, let's say, the 1 hour chart, we can see that we gapped down And at 8:30 in the morning, we started the day very, very low in price. But then throughout the day, we traded up and closed right near the high of price. So this is a picture of a bullish engulfing candlestick. Now, why is this relevant? What is so important about this? Well, it's important because it shows that at some point the buyers came in. But more importantly than that is we're going to add one thing to this chart, and we're going to add something called volume. Well, what is volume? Volume shows me how many trades occur during a given period of time, and in this case, how many trades occur during the day. And what you'll notice is that yesterday's trading volume on this chart was the single highest trading day that has existed since the beginning of May. And this is a very telling thing because when the markets were in this period here of May, that high volume was coupled with a lot of market volatility and market sell-off just before establishing a bit of some market basing and then rallying higher. In this case, we saw tremendously large volume with this bullish engulfing candle. Now, historically, when I see this bullish engulfing candle with large volume, you will oftentimes see trends change direction. So, does this mean that my overall daily trend is about to change direction? Not necessarily. What it means is that I need to be on the lookout for that to happen. So, as a trader, how can I take advantage of this? When do I consider getting into a position? Well, the best thing that I would say is that to get into a position like this, I would need to have a day where price trades above the high from yesterday. So I'm not willing to take an entry until we get above the high from yesterday, and my stop would be below the low from yesterday. So this would be the area where I would be saying, okay, well, I was obviously wrong. The markets are not going to continue to go up. And my entry would be above the high from yesterday. So it gives me a defined range of where I would be wrong. Now, I think that the most telling part of this would be the volume that we are accompanied with. And that volume is most important when looking at this chart. So when trading a bullish engulfing candlestick, you're looking for price to gap lower and then trade higher until completely engulfing the prior day's candlestick. In this case, we actually engulfed the prior 3 days worth of candlesticks, as it was a very, very strong move to the upside in the market. So hopefully this is a pattern that you can look for when you're trading inside of the markets. Do they always work? Not necessarily. But when coupled with this kind of volume, I find this to be the most powerful candlestick reversal pattern that's available out there. But let me know below. Let me know what your thoughts are. Leave them down below. Would love to hear what your thoughts are as you take a look into the markets and what you find the most important thing. If you have any questions, go to TradersArmy.com. Hopefully we can give you some guidance and some support. Till tomorrow, everybody. I'll talk to you soon. See ya.